All right, we're going to get started now. So hello and welcome. Thank you for making time to join us today to learn about tax incentives for R&D tech sector investment in the Montreal market. My name is Stephen Armstrong, and on behalf of Maple Business Council, it is our pleasure to co-host this webinar today with Fasken and welcome our distinguished speakers from Montreal International, Investissement Québec, and the Quebec Government Office in Los Angeles. We have a lot of ground to cover today in our hour, and we'll be starting with an overview of some of the key tech sectors in Montreal, including ITC, gaming, and visual effects. After which we are going to be hearing from Quebec Government Senior Representative in California, Monsieur Philippe Huneau, who will provide some information on the support that Quebec provides companies in the state who are interested in investing in Quebec. And then we will look specifically at the tax incentives and strategies for investments in Montreal. Regarding the webinar, I have just a few points I'd like to cover in advance. We are recording today's event for the benefit of those who can't join us today live, and also we'll be providing a link to those who are attending for your future reference. Guests will be on mute to ensure optimal sound quality for the presenters. And you are invited to ask questions during the program. Use the chat box at the bottom of your screen in the webinar platform, and we'll try to get to as many of these questions as time permits. Just a few comments about Maple Business Council for those who may not be familiar with our work. We are a cross-sector, membership-based networking organization focused on promoting bilateral investment, trade, and entrepreneurship opportunities between Canada and Southern California and New York. And we founded the organization in 2015, and our scope of work includes hosting in-person and online events such as today's program, leading commercial delegations to major Canadian markets, hosting digital content platforms for our members to share their thought leadership and market expertise, and working with economic development stakeholders in Canada and the United States to further the opportunities to grow between Canada and the US. And it's our pleasure to count Fasken as one of our renewing member organizations. It's now my pleasure to welcome our moderator for today's event, James Villeneuve. James is a senior business advisor with Fasken, and formerly was Canada's senior representative in Southern California, Arizona, and Nevada as the Consul General of Canada from 2014 to 2018. James has a distinguished international business career with Anheuser-Busch InBev that spans Canada, Europe, and the United States. James, I'll turn it over to you, and thank you for this opportunity to co-host today's program.
Thanks, Stephen. And I just want to congratulate you on getting Maple off the ground. I remember when you started it, and just its progress, how it's grown, and how it really does aid Canadian business, both operating in the United States and in Canada. And you've done some great work doing that. It's a great organization to be part of. So thank you for organizing this for us today. I think this is going to be a very interesting discussion point, given the opportunities that exist in Montreal and in Quebec, the entire province. And we've got a really great group of speakers today. And I think what's unique about this is that they're based in Montreal, but also in California, in Los Angeles. So you've got the opportunity to tap into anybody on this call if you want to get things going, or if you're planning to expand your business in Quebec or Montreal. So just let me introduce our guest speakers. First of all, Mark McLean from Montreal International will be joining us. He'll be the lead speaker, followed by Nathalie Rivard from Investissement Québec, Philippe Huneau from the Quebec Government Office in Los Angeles, and finally Claude Jaudoin, who is with Fasken in Montreal. So with that, I'd like to turn it over to Mark to get things going.
Thank you, James. Thank you, Stephen. Thank you, everyone, for being here. Let me just bring up the slides. Well, we're chatting, and I'm hoping someone will let me know if you guys can't see these slides or what's going on. I'm just
it's working.
Working great. Good to hear. So good to be here. Thank you very much again, everyone at Fasken and Maple, getting us involved in this. You guys are great partners, and you have been pre the end of the world, like I like to call it, pre-COVID, and have been continue to be great partners. I'll tell everyone again, I'm one of the people that are based in Montreal. My role in Montreal International is to travel normally and meet with people. You don't understand how much I miss traveling to Southern California. It is one of my favorite places to travel to. So I look forward to getting back there very, very soon. Hopefully within 2021. So I'm here just a little bit to give you a little overview of Montreal with my counterpart Natalie, who's from Invest Quebec. You'll hear from her in a couple minutes. Just give you an overview of the city, of the couple of the really interesting ecosystems that are in Montreal, ways that we think people could take advantage, places where we've seen a lot of success in collaborating and working with companies based in LA or even around the world that are coming to Montreal. For those of you who aren't familiar with this city, and I'm sure a lot of you on this call are, one of the biggest cities in North America, over 4 million people in Greater Montreal. We've had a ton of economic growth in the past couple of years. We had one of the biggest rebounds from the initial COVID dip this year. We've been one of the least affected cities in the world. And I represent what's Greater Montreal. So it's, if you've ever been here, it's about an hour's radius from the center of Montreal. So 82 municipalities. We're close. We're close to the U.S., especially Northeast, Boston, New York. I've driven to on a regular basis with the family. So it's not hard to get here. But what I really want to talk to and why we're here today is talk about a couple of the really interesting tech hubs, a couple of the really interesting industries in the city, where I think there's a lot of opportunities for collaboration, a lot of opportunities for investment, right? And so the industries we're specifically going to be speaking about today are what's kind of the I don't want to say the flavor of the day, because I think it's more than that, but something that's really, really affecting everybody in every industry these days is the artificial intelligence industry. What could be even more important than the AI industry, or has a lot of direct implications for all of our daily lives, is the cybersecurity industry, which is strong in Montreal. Something that for those of us who have kids, and maybe some of us who grew up doing it, is the gaming industry, which is probably one of the strongest and most well-established industries in Montreal. And then beyond that, something that has a lot of parallels with LA is the Vfx industry. One of my favorite projects I worked on in a long time was a company based in Los Angeles called Pixelmondo that we announced their launch about, I guess, closing in on 2 years ago now with the mayor of Montreal, which was really, really fun. So first off, the AI industry. The AI industry is honestly one of my favorite industries to talk about. I've been involved in it quite a bit over the past couple of years because of just the nature of the territory, because I represent the West Coast. It is really, really exciting what's going on in Montreal in the AI industry. Let's see, someone has... So we have a ton of research going on in Montreal, and just to give you a quick overview of that, is that the AI industry in Montreal is really, really strong because of really 4 factors. So we have the history of AI in Montreal. We have one of the best research hubs and one of the most cited computer researchers in the world. He's based in Montreal. It's Professor Yoshua Bengio. He's here. You could look him up. He has the most research ever published in Montreal. Beyond that, we have an extremely large pool of talent in Montreal. So with this pool of talent, a lot of it is associated to the MILA, which is the Montreal's Research Institute, which is formerly known as the Montreal Institute of Learning Algorithms, but is also now considered the Research Institute for specifically a couple of subsectors of artificial intelligence, including deep learning and reinforcement learning. Beyond that, we have a lot of the major players in Montreal, which are, you can see a number of them here with Google, Samsung, and a number of the other players. And this is what's happened over the past couple of years in Montreal in artificial intelligence, right? You've seen almost everybody has opened offices here. And you see a lot of the big names and like the ones that we know in our daily lives, Facebook, Google, Samsung. But beyond that, we have a lot of startups that have open offices here. And if they're not on this list, and which has been really exciting for us at Montreal International and Invest Quebec. If they're not already on this list, there are very few companies in the world that we haven't spoken to already for artificial intelligence, right? So it's been really, really exciting. We've seen a ton of companies, and we keep seeing this investment. We keep seeing this excitement in Montreal. It's opened a lot of doors for us. Beyond that, as I mentioned, there's cybersecurity. Cybersecurity is really, really important for all of us in our daily lives. We've seen it more and more with COVID. Everyone's moving online. People are doing Zoom events instead of meeting in person. All our banking online, everything's online. I don't need to reinforce how important this is. But what's been fun for Montreal and Quebec in general is our strength in cybersecurity. There's a ton of overlap with cybersecurity and artificial intelligence because of the way you're able to do your research and do your identification of cybersecurity threats. Montreal has a couple of research chairs into cybersecurity. And beyond that, we have a ton of expertise at a couple of our universities here. So with all that put together, it allows us to be really, really strong in cybersecurity. And we've seen even more and more companies coming to Montreal for that. We had a big win at the beginning of the year with a company called Go Secure that's set up in the city, doing all their cybersecurity work here. And then finally, to wrap all of that up, there is the 5G networks, right? 5G is what's going to be accelerating a lot of the world's I guess adoption of these technologies, right? They're going to be adopting all artificial intelligence, everything that we're about to talk about. And Montreal has a specific sector and a specific investment in 5G technology, right? We have some collaborations with the Ontario government and the federal government for these 5G technologies, which are extremely important for anything to do with cybersecurity, artificial intelligence, VFX or gaming, right? And because of these partnerships, because of these opportunities, we're seeing a lot of interest in Montreal, again, for these cutting edge companies that want to take advantage of all of this. I'm going to hand it off now to my colleague or my counterpart at Invest Quebec to talk to you a little bit more about a couple more of the I guess more entertaining industries of the VFX and gaming. So Natalie, all yours.
Thank you, Mark. Glad I can talk to you today and about two industries that are key to Montreal, at least for the West Coast especially. It's the gaming and visual effects industry. Montreal is one of the top 5 hubs in the world after Tokyo, London, San Francisco, and Austin. It is also more than half of the entire Canadian industry for video games. We have 140 plus studios and over 15,000 professionals. It's a complete ecosystem, and we have players in quality assurance, localization, tools, audio service, they're all there. So it's a complete system. Montreal is also home to the flagship studio for Ubisoft. And Ubisoft have been in Montreal since 1997. And Montreal has been at the forefront of game development since then. And for those of you who know Warner Brothers, perhaps, Warner Brothers' largest studio is not in Burbank. It's not near Boston. It's in Montreal. And they've produced games like Batman Origins. All the games produced in Montreal receive accolades as they are top quality ones. One of the secrets for the success of the gaming industry in Montreal is that we have local colleges and university level training that specialize for video games, 3D and 2D. And these are some of the specialized campuses that have grown in the last couple of years. And it's really a top of the line training. So for the growth of your future studio, you can count on local talents. And the industry in Montreal used to be known for AAA games mostly, with EA and other large players being in Montreal. However, in the last couple of years, there has been a shift towards a diversity for mobile game, other than PC games, console games, AR, VR with studios that are well known like Felix and Paul, immersive experiences. So it's a well balanced and not only 3 AAA games environment. These are some of the companies that are in the gaming sphere that are currently in Montreal. We hope to add some more. And from the West Coast, recently, Gearbox has come to Montreal, and we hope to have other ones. There's synergies in Montreal that can be drawn from other key industries. As I mentioned earlier, Montreal in the video game sphere is one of the top 5 world hubs. And it's also all an ecosystem that offers companies that want to develop games, any and all of the services that are needed to complete a complete game, including obviously soundtracks, audio, and animation. On top of this, there's an overlap with the VFX industry that I will mention later. And also one fact is that Montreal is one of the 3 world hubs for aerospace and aerospace flight simulation. And CAE is the largest flight simulator manufacturer and designers in the world. And there's you can draw for talent that is technical across industries. And that's one of the secrets for success. And Mark will talk about that later on, is the talent pool that you can find in Montreal. The VFX industry, you have here some key facts, but Greater Montreal offers over 23,000 experts in the sphere. Montreal is per capita the largest concentration of VFX in Canada, and is poised to be one of the top 3 locations in the world. It is a booming industry and has produced masterpiece work that was included in the Oscar winner films, and the work was done by homegrown talent from Rodeo Effects, some from Frame Store team in Montreal, and the likes. And Montreal is also reinventing its expertise via cross industry talent with AI, as Mark has mentioned. And the president in Montreal is Autodesk, and the 2 top engine and tool engine companies, Unity 3D, that recently had a huge expansion in Montreal, and Epic with its Unreal Engine. One of the key factor for Montreal's success, other than the incredible talent, has been generous tax intensive incentives from the Quebec government. The Quebec government has put in place tax credits that have been feeding the growth of the industry. It will be talked about more in detail by Claude later on, but just so you know that these tax credits from the Quebec government, administered by Investissement Québec, can come up to 37.5% of your labor pool for gaming, and for film production, and VFX, it can be up to 36%. And for a larger project, the Quebec government also offers support, and so does the federal government. If you plan on coming to Montreal once we can travel again, there's 2 annual events that are noteworthy in the industry. There's the Mix that obviously this year was virtual, but is a can't miss event, and it's the largest in Canada. And there's Vfx Montreal that takes place every June. It's the largest visual effect event on the East Coast. We've had lots of success, Montreal International and Investissement Québec, in bringing companies from the West Coast in the last couple of years. Mark has mentioned Pixelmundo, that opened a studio in Montreal about 2 years ago. 2 years ago as well, Digital Domain has opened a studio in Montreal, and these are VFX studios. In the gaming sphere, just this year, New World Interactive from Colorado and Rainbow Studios from Arizona set up shop in Montreal. So just proving that even with the COVID, you can have new operations in Montreal. Now I will I turn it over to Mark again.
So thank you, Natalie. So I'm just going to run through a couple of reasons why these companies are setting up in Montreal, right? And like it's always the biggest challenge, and what we've always seen talking to people is talent. There's a global crunch for talent. There's always people fighting for talent, for world-class talent. So it's always the challenge whenever we talk to companies, whenever we knock on doors, Natalie and I, it always comes back to talent. And that's where I think Montreal really sets itself apart. Right, we have some of the biggest pools of talent in the world, and beyond that, we have some of the highest quality pools of talent in the world, right? Especially in the sectors that we're presenting with you today. So between the tech workers, the software development workers, the video game, it's hard to overstate how strong our talent pool is in the video game ecosystem, and then in the VFX ecosystem as well. And you can see that through the awards and the number of companies setting up shop in Montreal. Here again, it shows you a little bit the breadth of the more of the technical talent in Montreal. We have a lot of people, and there's a reason we have a lot of that talent in Montreal. It's from the history here, and the other reason we have a lot of that talent in Montreal is that we're one of the best student cities in the world. Right, Montreal has won over and over, win awards for being a fantastic student city. We're the best in North America. We were the best in the world. We fell behind Paris, I think, last year, but we're still considered the best in North America. So we have a large student population. You can see it here for the number of, especially of tech talent coming into the city. We're the biggest in Canada that comes into, that graduates from our universities. More information on a lot of our students and tech talent here, and we'd be happy to share these slides with anyone who's interested. And beyond that, I think most of you know Montreal, and you probably hear our accents, especially for a few of us, that we are a bilingual population, but that we have more English speakers here in Vancouver. We always get the question. We have a lot of trilingual speakers here, and I think it really adds to the creativity of the city when you have all these cultures. Beyond that, just quickly, operating costs, right? And you can see how much more efficient it is to operate in Montreal because of our tax credits, because of our cost of living and cost of operating. Here, we're significantly less expensive than a lot of cities, and you see Los Angeles is near, I guess, 5th or 6th from the top there compared to Montreal. Beyond that, there's office space. Whenever we talk to companies about office space, they're blown away by how inexpensive it is to get AAA office space in Montreal. It's like I said, 2/3 of the price of Los Angeles, and then when you compare it to some of the other cities, more expensive cities, it's pennies on the dollar to have great office space in the city. And then overall, again, just the salary costs, right? You can see again here, our salaries are significantly less expensive than most of major cities in North America. Again, we're at 25% or 75% of the cost of other cities. We have our tax credits that Claude will jump into and give you a lot more detail. And finally, I just want to say the quality of life. And I won't go into these slides in detail. You can see them all here. Our cost of living is significantly lower than many other cities. Our safety and our quality of life in Montreal is significantly higher than many other cities. I was just looking it up earlier. The homicide rate is extremely low. So what all that adds up to is that everyone that you hire in Montreal wants to stay in Montreal, right? We have a lot of people that they bring into Montreal, and you have a lot of retention. We've done studies. We have about 6 times the retention for your employees in Montreal compared to almost any other city in North America. So really, there's an added benefit there of having your operations in Montreal. So from that, just a quick summary on Invest Quebec. My colleague Natalie, as she mentioned, she's based in LA. So she'll be able to reach out to you if you have anything, again, when we're allowed to reach out to people and talk to people face to face. She's based there. They act as well as your support for setting up, as well as the Bank of Quebec. So there's a lot of opportunity to partner with them. And then again, I'm based in Montreal, but on a pre-COVID, I used to travel, and hopefully post-COVID, I'll travel again. These are the service Montreal International offers. We can offer a lot of services and a lot of support for your projects as you consider Montreal for a location for your operations. So thank you very much. I'll pass it on to Philippe for a quick overview of the office, the Quebec office in LA. So Philippe, all yours.
Thank you very much, Mark. Really appreciate it. Tell you how much tax guy and gaming is important for our office. It's useless. First of all, I would like to say that we have two offices. The one in Los Angeles that obviously is looking we're very active, but also we have an office in Silicon Valley, which is a lot of importance, especially with the AI and cyber security. But I will not go into much detail, but what I would like people to remind is that certainly at the moment, government, from a government point of view, we're open for business. And more specifically, we want to establish partnership. Just an example, Prime Minister Legault came to Los Angeles last December. We had a chance to visit a lot of the main actors here. Mr. Fitzgibbon came a month after in order, so basically it was probably one of the best one-two punch in the history of the Government of Quebec. You have the Prime Minister doing Quebec and Mr. Fitzgibbon that arrived. But in order to sensitize what I just mentioned, that for example, after this meeting, we were able, even though if it's not in Vfx, it'll give you an example of what we did. You know, we were able to secure with the studio, who are a big producer, 3 movies in Montreal. And basically, when I say we already have a lot of advantages in terms of the tax credit that my colleague already mentioned before, but more than that, if companies want to establish a long-term relationship, establish themselves, we probably can go think out of the box. It's exactly what we did with Central Place. Instead of them coming and doing one movie and access to the tax credit, shoot their movie and take advantage of the talent of Montreal, basically we sat with them and said, okay, what will it take for you to commit for 3 movies? And it resulted in an investment of $450 million over for the next 3-4 years. So we are doing this kind of thing. We're working hand to hand with our colleague of Montréal International, with Investissement Québec. Basically, what we would like to send as a message, and this is the kind of thing that we can at the delegation here, is to tailor-made a proposal, something that will make sure that you will never hesitate to go elsewhere than Montreal or in Quebec in general. So I don't want to take too much time. I don't know if there is a panel of questions, but the important thing, like I mentioned, is that there's a way to establish things. There's a great potential, and there's certainly more than important than anything else, that great talent in Montreal. And California, the office in Los Angeles and Silicon Valley are there in order to make sure that we help you to put in place a partnership with us. That's all for me.
It's great. Merci. Claude, I think you're next.
Sorry, I was waiting to get prompted. So good afternoon, I'm Claude Jodoin. After all of these presentations, you probably ask yourself, what else can they say to convince you to come to Montreal to do R&D or gaming or develop any other product? Well, I'm going to talk to you about tax, probably the most fascinating topic for you. We're going to keep it to under half an hour, but you can reach out with the chat buttons or the questions as you need. So allow me to present this in basically three parts. First, I'm going to address the kind of tax context that we have, then deal with the R&D incentives. We'll touch on the gaming and special effects credits, and we'll look at certain structures that can help you benefit from this and maximize the benefits. So to start off with, Canada is, like the US, a country with 2 layers of government. So we have a central government and we have provincial governments for each of the provinces. Each is given the jurisdiction to tax. And as oddly as you're probably surprised to learn, each has exercised that jurisdiction and levies income tax and sales taxes. So I got to get to this part. I'm sorry, I'm not sharing my screen, I don't think.
No, you're not, Claude, but you can, you're a co-host.
Okay, let me see if I am doing it properly.
Oh, yeah, it's work. Yes, it's working.
All right. So you're probably all wondering. Okay. So here we are. So in that context, okay, I have this in my way. As I said, both the central government and the provincial government of each province has levied an income tax. In the case of Quebec, that income tax runs in about 11.5% for general corporations. And for small Canadian control entities, there's special rates that apply both federally and provincially to bring it down to about 14 to 17% on part of its income. From a sales tax point of view, you'll note that we have a federal rate of 5% and a Quebec rate of 9.9. Now, these are based on the VAT principle, which mean that to the extent that you're incurring these taxes for products use in your business, you get an 100% recovery of any taxes paid. So it really is nothing more than a cash flow inconvenience to that extent, because it's not a cost to any business in Quebec. Now, when we're talking cross-border, which is the main point of interest here, you're always thinking, I would hope, withholding tax, because either going to the US or coming from the US, the payments going back and forth are sometimes subject of a levy, what we call a withholding tax. The general rate is 25%, and our treaty that was negotiated between Canada and the US provides for a number of reduced rates. So for example, for dividends, the 25% rate goes down to either 15% to everyone who is entitled to the treaty benefits, or even further to 5% if the person getting the dividends, a corporation having at least 10% of the votes of the payor. Additionally, interest is subject to a special regime where the rate can be as high as 10%, but in a lot of cases reduced to 0. And finally, royalties that are paid, and these are relevant, especially in the context of developing IP, have withholding tax of 10%, which also can be, in some cases, reduced to 0. So when you're carrying on business in Canada, you have a number of opportunities and choices that you can make. So for example, you could choose to go through a branch or a Canadian sub or a foreign sub or an unlimited liability corporation, which is sort of like an LLC, or a partnership, a trust. That's just to name a few. Now, for purposes of encapsulating the operation, it's highly recommended to use either a corporation or some other vehicle that has sort of a boundary in which you can put in all those activities. In particular, as we'll see for corporations, a corporation is sometimes required to maximize the tax benefits that you get with respect to the activities that you'll be carrying on. So the question arises often as, should you use a corporation or a ULC, ULC being the Unlimited Liability Corporation, which highly resembles the LLC that you find in the US, except that, as the name implies, it's an unlimited liability. So there's a number of subtleties that have to be taken into account that make it practical and that encapsulate that risk. One of them being that your members are corporations themselves. From a Canadian standpoint, these corporations are fully, if you wish, opaque in that they're corporations from our perspective. From the US, they could be transparent. like an LLC is. Incorporating in Canada is a relatively simple process. It could take as little as a day, depending if you're just doing a straight incorporation without having too much of a, if I can say, difficulty in the name. You could use a numbered corporation to start out with. So it's a very easy and, if I can say, user-friendly process. Now, continuing on that, one of the issues that occasionally comes up is, well, under which jurisdiction can you find, a corporation? Every province in Canada has its own corporate law, and the central federal government has also a Corporations Act. And now the difference between them have become a lot less noticeable with time, whereas at the start, perhaps there were notable differences. Today, you find with time that they've become almost the same, except for certain little things. So one of those things being the requirement to have Canadian resident directors. So if you look at the columns that are in this table that you have in the handout, a federal corporation still requires a percentage of the board to be Canadian residents, as do certain provincial laws. Quebec doesn't. So Quebec, a Quebec corporation can be formed and have no Canadian directors. And so that's a plus. We don't have unlimited liability corporations in Quebec. You'll find those in BC and Alberta and Nova Scotia. Now, Ontario is probably going to move towards a removal of the requirement for resident directors, but that's not yet done. Okay. Now we turn to the tax per se. So so now we're going to talk about R&D. Now, R&D in Canada is a highly encouraged and permanent measure, both at the federal and provincial levels. And this brings in a large number of taxpayers, and we've seen some of the benefits of it in terms of all of the innovation and development that is carried out in Canada. Now, of course, they're not just doing it for tax credits, but the tax credits provide financing and funding, which is really needed for entities that are at the start of their economic life. So for example, we look at the three main components for R&D incentives. Now, the first one is deductibility. So here what's important is that a current expense is bankable. So what that means is you put it in a pool and you use it when you want. You can carry it forward forever. So unlike a business expense, which has to be for accounting purposes taken into income now, may create a loss. The loss may become stale, if not used within a certain number of years. The R&D expenses are always good and don't need to be refreshed because they're in a pool and you can use them anytime you want. The tax credit that you can get for R&D expenses, which is in addition to the deductibility. So the same expense is deductible and also gives rise to a tax rate. We're going to see in a moment the credit rates. So you have this tax credit, which is automatically computed in the year you incur the expense, and that can be carried forward 20 years. And finally, you have this little animal called a proxy amount. So what this is that at the federal level, for purposes of computing your expenses, and this is merely for the tax credit. So you're saying, what are my expenses that are eligible for the tax credit? We used to have to trace overhead and try and figure out how much of that was actually allocable to R&D. The legislation was amended to provide essentially that this would be subject to a 55% inclusion of salaries. So your salaries go in, and 55% of your salaries also go into this computation, just to allow that you don't have to trace. You're already deducting it anyways, but this is just for the tax credit. And so it makes for an easy approach, and it's quite profitable. Now, a word on the definition itself. So in Canada, we use a definition which I've simplified to these 7 lines, which is really a definition that is as wide, if not wider, than that used by many of the developed countries that have set up an organized tax system that includes research and development incentives. So just to say it, basically it relates to systematic investigation, research in the field of science and technology by means of experimental or analysis. And we don't need to go through the rest, but the one thing that is excluded, of course, is routine testing, quality control, which I guess intuitively you would say wouldn't form part of R&D anyways. Now, I thought it would be interesting to put some of the myths and truths about R&D at the forefront of our discussion. So for example, there's always a concern about where does it start? Where does it end? So as I said, the definition is very wide, and it includes things like developing a prototype or modifying production equipment to improve performance, using computers to automate certain decisions, adapting technology for another field, you know, this, and testing and developing technology. Sorry, I lost my line there for a second. The second thing about it is efforts and activities don't need to succeed. And a lot of times when you speak to a CRA, a Revenue Canada auditor, you know, they'll tell you their rule of thumb is, well, if you don't know that you're going to find what you're looking to find, as long as you took a systematic and disciplined approach to it, that's probably R&D. You know, so if you know you're going to find it, that may not be R&D, that may be just product development, which is a completely different issue. The next thing people usually ask are, does it have to be completed in 1 year? Under our rules, that's not necessary. The same R&D project or activity can carry over for several years. The next point is that all current expenses for R&D qualify. So it's not just a question of incremental. You know, you don't have to have only what's greater than last year's expense. That's important because you start from 0 every year and you add in there all the expenses you incur in that year. The other question is sometimes people ask is, well, we're not taxable yet because we don't have sales. We're pre-revenue. Well, being pre-revenue is not a bad thing because essentially what's happening is that for example, Canadian control companies, the CCPC, like Canadian Control Private Corporation, well, they actually get refunds from the feds and certain provinces. And the Quebec credits, as we'll see, are always refundable. In the cross-border context, often we hear about ownership of IP, saying, well, you know, do I want to go there and do R&D and lose the IP? What we're going to see in a minute or two is that, well, first of all, standard structures can be put in place to allocate IP interest that result from the research and development. Now, actually, I'm repeating myself in a way because I was saying, you know, in the context of a cross-border context, okay, we usually try to carry out R&D and maintain it in the entity that you want it to. One other concern usually is, well, we've received government assistance. Are we disqualified? So in Canada, the fact that you receive government assistance to carry out some of the R&D doesn't put you offside to be entitled to the benefits of incentives for R&D expenses. They are taken into account. So for example, if you were receiving a forgivable loan from a federal entity to do some research and development, that may reduce the expenses for which you can claim a tax incentive, but it certainly doesn't disqualify you. Now, finally, this is a point that's important to bear in mind. This is probably the only area where being timely is extremely important. You have to file your R&D expense claims within 18 months of the year end. Failing which, your right to that R&D expense is lost. So with that in note, let's go back. Let's go to see a little bit more. And don't hesitate, put some questions on the chat thing. I'll be happy to answer them. Now, in terms of what the incentives are, so the federal government has basically a base case, which is 15% is a tax credit for anyone. So whether you're Canadian controlled, whether you're not Canadian controlled, the 15% is available on qualified expenditures. These qualified expenditures include your salaries. It includes materials. It includes that 55% proxy amount that I talked about before, which is the overhead cost. And it includes a certain percentage of subcontracting costs. That percent is 80%. So if you have expenditures by a Canadian controlled company, then the 15% tax rate is enhanced to 35. So your base case is 15 for everyone, and 35 is for those that are Canadian controlled companies. So this is kind of just repeating what I was saying in terms of what's included in labor material, but I wanted to actually point out capital expenditures are excluded. So those are things that you would depreciate. This is not something that you can use in the context of R&D expenses. I provided here a small example just to give you a bird's eye view. And if you look, there's two cases here. On the top case, basically, if you look to the left of the table, that's for a foreign control company. Now, irrespective of its size, it's just because it's not a Canadian control company, it's entitled to the base rate of 15%, of which none of it is refundable. And when we say refundable, we mean if you have taxes to pay, you would apply it against the taxes to pay. If you don't have taxes to pay, well, you bank it because you won't lose it, but you won't get a check for it. So that 15%, as we see here on the $5 million example, represents $750,000 for a foreign corporation. Now, if you go further down for a Canadian corporation, well, there it becomes interesting. So you see on the first $3 million, your 15% rate became 35. So what that means is for the first $3 million of expenditures, you would receive a 35% tax credit, which would be 100% refundable. So you're getting a check for $1.05 million because of that $3 million expenditure. And if you made 5, which is the example here, well, above 3 million, the tax credit rate goes back to 15%, but remains partially refundable because you're a Canadian controlled private corporation. So you see on the example here for the refundable tax credit, you're up to $1.1 million, and you have a non-refundable tax credit, which you can apply against taxes in any future year of $180,000. Now, if we jump to Quebec to go straight into the problem, well, Quebec has its own system. It's relatively similar to the federal, but at the same time, it has its own set of rules. Now, with respect to deductibility of expenses, it is the same as in the federal expenses and system. So the R&D expenditures are deductible in the year you incur them. And you don't have to use them because you have this pool. It's the same pool as for the feds. And you can use them at any time in the future. The rate of the credit here, so the base case, remember we saw the base case on the federal side was 15%. Here is 14%. So for anyone that's not a Canadian control company, Quebec will provide a 14% tax credit. Now, the one thing that you want to keep in mind here, Quebec is the only province in Canada that has a system where all tax credits are refundable. So irrespective of your status as a Canadian control company or not, whether or not it's at 14% or a different rate, which I'll talk in a moment, it is always refundable. So that's key because that's funding to start your business, funding to start your research project. It's funding that you can use for whatever you want because it's a tax credit that relates to the expenses that you made. So as we see here, we have a expenditure limit, if you wish, or deductible of $50,000. But otherwise, all the qualified expenditures include salaries. It includes arm's length contracts. So if you were to use someone who is not related to you, you would have, as part of your qualified expenditures, 50% of the contract cost. In fact, I didn't mention this, but if you were working with someone that is a related party, then you would look through that contract and essentially apply your credit on the portion of the contract cost that relates to labor. Now, what's interesting here is that the rate goes up to 30% if you are Canadian control and you have assets of less than $50 million. So there's a rule that gradually reduces it back to 14% on a sliding scale where your assets go from 50 to 75 million. So it's what we call the wage tax credit, if you wish. That this table provides you with a bird's eye view of that example, where you see non-CCCs, non-Canadian control corporations, are at 14%, and after that, the Canadian control corporations benefit of 30%, and for the first 3 million, 14% on the rest. And there's the larger companies that get 40 to 30, depending on where they are in the asset limit. Now, in Quebec, we have a number of variations on the credit, which I don't think I'm going to take too much time on, just to give you a chance to look it over. But we have 4 credits. One is on salaries and wages, the ones we just talked about. We have an equivalent one for tax credit for university research, which is quite important because there, when you're hiring a university or a research center, you'll get either 14 or 30%, depending on the status of the person giving the contract. And of course, it is refundable as usual. You can have the same thing for fees that you pay in a consortium. If you are part of a research consortium and where you share expenses and presumably IP, that would be qualified for a tax credit on the expenditures that you make. There's also a notion of a pre-competitive tax credit, and there the credits go from 14 to 30% again on the amounts you pay. I did make a little note here that foreign specialists that are moved to Quebec for purposes of working on research in Quebec get a personal tax break. So for the first 5 years, there's a partial exemption from income tax. The first 2 years is a total exemption from Quebec tax, and then years 3, 4, 5, it's 75%, 50%, and 25%. I know that time is fleeting, and I'm going to try and zoom, but So I have a list here of certain of the tax incentives that may be of interest. I'm going to jump straight to the video game tax credit, because right after I'd like to have a minute to speak about structuring for you. So as mentioned before, there is a tax credit essentially for developing, oh, there's someone waiting, okay. So for developing essentially video games or that type of media, so there's two rates available. The first one is basically 30% if your product, your multimedia product, is not available in French. And the tax credit goes up to 37.5 when your product is also available in French. So there you see there's a kicker there, which may explain, for example, the presence of someone like Ubisoft, who does make all of its product as well in French. For purposes of these expenditures, we're looking at essentially salaries and wages eligible employees. And here, interestingly, when the use of subcontractors has the same approach to the one I just described for R&D. So if you're using a contractor with whom you are not dealing at arm's length, you'd have to look through the contract to find out what's the portion of the labor of that contract that is labor. And for non-related persons, you'd use an arbitrary percentage of 50% provided by the law. I have taken the liberty of reproducing an example that was provided by our friends at Montreal International. I thank them very much, just to illustrate how generous the video game tax credit can be. And if you look at this, this is an example with 125 employees. The previous one was 15. And you see how the numbers are important, because at the end of the day, what could have otherwise been costing $11 million to do, depending on whether or not you're in the 30 or 37% category, it goes down to $9 or $8 million. So that's substantial. And it's something that you want to bear in mind when you're choosing where you're going to develop your multimedia products. Now, the next one here is essentially a credit for, if you want, special effects and film production services. And there you benefit again with 2 layers of government. And by the way, I should have said for the video games, the federal government does not have a tax credit specifically aimed at the development of video games, but what they do have is that to the extent some of what you're doing represents research and development, you could get the research and development tax incentives at the federal government and the special video game credits at the provincial side. So here, with respect to the film production services, there's incentives at both levels. And essentially what we're looking at is a 20% of qualified expenditures, which is labor and cost of certain property. And there's a different layer for labor-based computer-aided special effects and animation and shooting in scenes in front of a chroma key screen. So as noted, there's no minimum spending, there's no caps. I mean, there are some limits, but for example, for the federal rate to apply, you have to be paying to Canadian residents. So now if I can just take 2 minutes, I know I'm probably over my time. I'll just want to show you very quickly an example. So as we said before, you can come to Canada to do the activities either directly, but here that would require that you'd have an allocation of your activities between Canada and the US. and making sure that both IRS and Revenue Canada agree with that allocation. So one of the things that we often suggest is not to do that. So unless there's a compelling reason. So if you were doing this US co, and in this case here, that carries on its activities alone, it would get that 15% non-refundable federal credit, and the provincial would be 14% on expenses. It could also do it through a subsidiary, which is something we would recommend, because that would allow you to encapsulate the activity, the responsibility, and obligations in Canada. It's a lot easier for filing purposes. And basically, the net effect is the same, because basically you're just having a corporation carry out here in Canada what the US company would like to have done. And if you do it properly, well, essentially the Canadian company would be the one that would generate the tax credits from the feds, the refundable ones from Quebec, and the intellectual property could still belong to the US company if properly structured. And just to give you an idea of what numbers look like, on $1 million of expenses, the cost after tax is about $500,000. But bearing in mind, you get a check for 112 in that. So, you've paid the $1 million, you've gotten all these deductions, your cost is $500,000, but you have 112,000 in the bank as a result of it. Now, let's see if we can improve that. So you could partner up with someone in Canada and find a way, or hire a separate company, but that's a different case study, where you would find a company that's a Canadian controlled company, and i.e. it would not be controlled by the US company. And the arrangement would be that US Co hires the Canadian company to do research in Canada. So this is an interesting point. I mean, the important part here is that the US company does not carry on business in Canada. So when this happens, well, you're looking at what that Canadian company can derive with respect to these activities. And what we find is basically the same $1 million as before. Well, it costs net $282,000, but you get a refund of cash of $660,000. So when you're looking at your $1 million, you got $660,000 back, and you find the net cost to be $282,000. One of the ways this is often used is if you are working with someone, or you create a subsidiary, and sometimes we see companies that have members of their staff, or not their staff, their employees, that are resident here and actually have an economic interest in the company, it can provide that service. So in that case, the sharing of these incentives is sometimes possible. And so the US company gets the benefit of the Canadian incentives that way. I think I'm going to have to stop here because I see that I've gone 3 minutes over time. So I don't want
Yeah, that's great. I think we're going to have to probably wrap up shortly. We're pretty much almost, we're past the hour now for sure. I would like to maybe just say quickly, first of all, thank all of our speakers. I found this to be enlightening. Certainly the ecosystem in Montreal, I knew it was strong, but to see it visualized the way it was, I think there's just great opportunities for people that are, one, doing business, but to expand their businesses. And obviously you've got some experts that were on this seminar and call. We did record it, so you have the ability to go back and look at it. And I think directly reach out to individuals on this call for questions or assistance. I also know the Canadian Consulate is on with Guillaume and others. Lucy is on as well. They can be of assistance as well in terms of navigating the federal government. They work very closely with the Quebec partners that are on the call as well. So thank you everyone for joining, and we look forward to setting something up again. Take care.
Thank you.
Thank you.